Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update for the week ending. Well, this is Saturday, 9/13/2025. This is part one, my market review. Part two on stocks will come out sometime, probably after futures are open on Sunday. I am not at home, which what else is new? This is my travel month. So I'm not using my home setup. So if audio isn't as sharp, my apologies in advance. I title this with the question, will the market sell the news as the Fed cuts rates on Wednesday? That's assuming they cut rates. I don't think that's much of a question considering what news comes out between now and then. But will the markets perceive it as too little at 25? Will 50 basis points spook the market and worry about is the economy worse than we think? And if they don't cut, God, I can't even imagine. So I'm not even sure that there's an easy answer for the Fed. Again, my name is Jeffrey Scott. I am the Market MRI Pro at gmail.com, and my Google group is called Top Down Trader. As always, these sessions are for educational purposes only. Any recommendations should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate how I use the tools of top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. There is no warranty that if I talk about a stock I might buy that it's going to go up. Trading stocks and options should be considered risky. You should always consult with your financial advisor before taking trades. And I've got tools in multiple platforms, and I'm looking forward to an announcement about the Meta stock tool set. If you're looking for my wealth charts video, stay tuned. It'll be there Monday morning. I'll do that probably on Sunday as well. Live meeting October 26th and 27th. This is in Palm Beach Gardens. You'd fly into PBI and it's about a 15-minute, give or take, Uber ride up to the hotel. My good friend and a great educator, teacher, trader, software developer, John Person, does his the 2 days before mine. So you could come in on Thursday, go to John's program on Friday and Saturday. My hotel's a mile away. You don't even have to switch. And then come to mine on Sunday and Monday. Separate fee for both, obviously. Mine cost is $12.50, including breakfast and lunch on Sunday and Monday, and a dinner cruise on my yacht, Stocks and Docks, on Sunday Eve. All paid attendees receive a $400 rebate, which they can use towards next year's Florida meeting or any of the tools that I can control price on. Love to have you join us. Speaking of joining, why not join my Top Down Trader Google group? This will be the group that will transform into, I suspect, a Discord site in the not too distant future when I have more time available to interact with folks at the site. I always ask the question, and I think it will become much more important next year. Is there a recession in our near future? The gray bars represent refression. This is the 10 minus 3-month treasuries. This is the 10 minus 2 years. The black line is a zero line. We invert when we go below. And notice every time you invert, you have a gray line, except we don't have one here yet. Same thing on the 10 minus 2. So it's hard to believe that it's different this time. In fact, when you start to say to yourself, it's different this time, it really is not. So one has to believe that we've got a recession coming at some point, but you could see there's often a delay before you get that recession. If you look at the high yield index option adjusted spread from BOA, not seeing any evidence of credit tightness. And if we look at the Fed diffusion index, this data comes out this week. And we'll see. I guess it comes out Thursday, so it's after the Fed. Recessions occur when it gets below minus 20. The last reading was minus 0.3, and obviously we'll see what happens when we get the data this week. Know your news and earnings. I mean, yeah, there's some manufacturing on Monday, retail sales, import prices, industrial production, capacity, business inventories, which is very backward looking, home builder confidence, all come out Monday and Tuesday. Housing starts and permits Wednesday morning, but certainly all eyes on this market will be looking at 2 p.m. for the FOMC rate decision and then the Powell press conference at 2:30. We have some claims on Friday, and there's that Philadelphia, or excuse me, on Thursday, and this is the Philadelphia Fed manufacturing. No major news on Friday. It's also a slow week of earnings as we start transitioning soon to the fourth quarter earnings reports. It's a judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. So I go very quickly and I look at a lot of charts and I say, this is what I like. I think it's important to know that there's a difference between looking at charts and saying it looks good and to take a trade. I try from time to time to slow down a little bit and actually show you how I might look at my buy stop and my targets and my sell stop. The reason you go to a meeting is because instead of getting a 30 or 40-minute video, instead of even getting one of my 3-hour online free webinars, it's because you get multiple days to slow down, take things apart, and not just show you what I'm doing, but the why, the when, the how. So last week, if you looked at my Sunday video, you would have seen I talked about my favorite signal, which is this dual momentum, which are these two dots above the yellow line, which is a squeeze. And we talked about a stock called Grab. And I talked about it, how it's a Southeast Asia version of Uber. And I think they actually bought Uber's rights there. And it was a perfect setup for me. It broke above the 50. Technically, it was a better setup the day before, but I had those dual momentums, dual breakouts, but it's the momentum two in a row that has been the go-to signal for me. It had volume, which is the third one up. It's in a weekly EMS that's going up, and it just had a CPR. And then the other thing that I really liked was it broke the relative strength versus the spider, broke above the moving average, as did on balance volume. When I put that constellation of findings together and a high jump that's neutral, I find some of my big winners. Now, I took that trade, and you could see what happened 1, 2, 3, 4, 5 days, and we had a pretty significant run. Now, it's a cheap stock, so percentage-wise, it was significant. If you didn't buy a ton of it, you probably didn't make much money on it. But if you come to a live meeting, you're going to see, why am I buying it? How did I find it? Why do I like this setup? What's the justification? What is the setup? Where do I place the entry? How do I protect it? What's my stop, both from a buy and a stop loss? How big of a position? And how do I make a consideration about options? What's option strategy or stocks? Now, in a $5 stock, I buy stock. Easy, simple. But this is the home run setup. And this is what I look for. And I built a tool with Market MRI Pro I, meaning Praveen built a tool to make that easy. So I'm going to jump into the charts, but just to tell you, if you come to Florida, this is not my hotel where we're staying. However, if you bring your loved ones, this is 5 minutes, 10 minutes from the hotel, 1 or 2 right turns, and it's on the beach. It's also a Marriott, the Marriott Singer Island. So why not bring your loved ones and let them love you back, because they'll have 2 days on one of the nicest beaches around. All right, on to the charts. So let me make sure I save this. I have a tendency to forget to do that. Close it. Here's the market breadth. This was a horribly weak day. Whether you felt it or not, I'm going to show you why. Bitcoin was up. That always helps. The dollar was up 0.15, so it's starting to come up. You can see over 5 days it's still down a little bit. Volatility, interestingly, was flat. The Qs were up 0.44, and they were the big leader. As you'll see, everything else was down. The Spider mostly flat, down 0.03. The Diamond's down 0.5%. And the Russell, which had been leading on the week, was down 1.03. When we look at change over the last 5 days, you can see Bitcoin leading, followed by the Qs, the Spiders, the Diamonds, and the Russell barely positive, the dollar negative, and volatility negative. If we look at the new highs minus new lows at 52 weeks or 12 months, both the NYSE and the NASDAQ are positive, but they came down some today. If we look at the S&P 500 sectors, you could see communications, discretionary utilities were up, and communications has been doing very, very well. But what was lagging? Healthcare, which had been up. You can see over the last 20 days, it's been up 3%. It's even been up over the last 5 days. Materials were down 1%, industrials 0.8, energy 0.59, real estate. So that was a kind of a interesting market rotation day. From a theme perspective, blockchain, copper, silver, which is on fire, clean tech, social media. Now you're getting to where you're up less than 0.5%, data centers, video games, artificial intelligence. But why do I say it was so weak? In the S&P 1500, 9% or 1 out of 11 sectors were up. Same in the NASDAQ, 2 sectors were up in the NYSE. 12% of the industry groups were up in the S&P 1500, 29 in the NASDAQ, and 15 in the NYSE. And the strongest sign in my mind of how weak of a market was only 17% of the stocks in the S&P 1500 were up, 33% of the NASDAQ, and 27% of the NYSE. So to me, at the end of the day, this was a relatively weak day, but in the setting of a super, super strong week in the U.S. markets. Hopefully you made some money. It was a good week. If we look at the timing model, we'll see the daily charts. We set an all-time high and reversed today on the Spider. We had a very different looking candle closing just off the all-time highs on the Qs. So I'm going to have to move that line up and that line. The Russell opened and closed an inside bar, so an indecision bar could be the beginning of a pullback, and the same on the diamonds. Countering the negativity is we're still in a buy signal on each of the daily charts. If we jump to the weekly, you can see all-time highs on the weekly on the Spiders and the Qs. Also on the diamonds this week. The only thing that's not hit an all-time high is the Russell. And notice the Russell's giving us a doji. And all the timing models remain long. So despite my title, which is potentially negative, the sell the news, despite some of these candlesticks that we saw on Friday, my market timing model still says to be long. Now we have to take all of the different data to make a decision. If we look at the US index ETFs, let's look at them one at a time. We start with the Spider, and again, all-time highs, traded higher today but closed down mostly unchanged at minus 0.03, and we could see at best case it's going into a period of sideways seasonality. We are above the 17, we're above the 50, and we're way above the 200. And I want to emphasize I don't expect a pullback that's significant, but even a pullback to the 200, the 50 at 636 from 655, it's only about 4% or less. So I wouldn't be surprised at some point we're going to get that pull back to the 50. They call it free parking for a reason. But I'm a little worried about the reversal we had during the day today. Remember, my signals still say to be long, so temper my negativity. The Qs, nothing negative there. Further breakout, kind of a cup and a handle and a breakout, but it too has sideways seasonality. And again, It's got 17 and 50 right underneath for support. Here was a pullback and a bounce from the 50. They happen, and they're likely to happen again sooner or later. If we look at the diamonds, you could see different candle. It opened up, closed lower. We know that because it's a solid bar, and it was down on the day because it's red. It's going into some short-term weakness, some negative seasonality, but like the others, it still has great support, the 17 and the 50. And here was a test of the 50 and a bounce. They happen. And then lastly, if we look at the Russell, the one that was down the most in the session today, um, you can really see the similar pattern of opened down but closed even lower for a red candle down over 1%, but sitting above major support. And you could see the reversal off the 50, even though intraday on that day it actually traded lower. So seasonality, not our friend here. So despite my signals being long, we do have a big news event coming up on Wednesday. It would not surprise me for it to be a sell the news after the massive run we saw in the market this month. But it's also hard for me to short all-time highs when my timing model says be long. Now, we'll look at other things that will temper my enthusiasm. The VIX was actually up 0.34 today, traded lower, opened lower, closed higher. You can tell it closed higher. It's an open box, and it was up on the day because it's white. If we look at the dollar, one of the things that I think has supported the falling market, that and rates, you can see on the day the dollar actually um, closed lower than it opened to try, but it was still up on the session. So it gapped up but closed within the prior bar, and the dollar was up 0.15. Not a big testimony of a super strong looking candle. If we look at commodities, well, commodities have been interesting. Gold has been at all-time highs. I still question this bar here. I know it was a volatile day, but you could see gold gapped up again but closed near the low of the session, and gold was up 0.28. We talked about gold, and told you that I was going to be buying gold because of this breakout. And it doesn't look like much, but if you buy options with leverage, with the options, you can get a pretty big return on a stock that moves 16, 14 points. And that really helped juice my return this month. So gold still looks great. I don't think anything changes. And gold may like the rate cuts. Silver, not an all-time high, but a massive move. Spinning top, is this going to be the high? You wonder because the high jump is 100. It's certainly extended. So I might be a little careful. And a lot of the silver stocks that I looked at kind of looked toppy. And you also saw, or I also saw that their earnings per share growth was actually slowing down. So we will see if anything comes out of that. But silver, obviously a super strong day in the market. But will that be the beginning of a reversal? What else do we have on the commodities? Oil is bouncing around by the 200, and it was down. It was up 0.43. I'm sorry. Natural gas can't get above the 50, and until it gets above the 50, I don't care about it. And kind of similar to what we saw with the dollar, we didn't do much today in the rates, but we gapped up higher. We traded much higher, and we closed close to where we opened. And so the rates today were up 1%, but I wonder if the rates have bottomed. And we'll have to see how they respond, especially at the long end, to what is potentially going to be a rate cut. The short end will be manipulated lower by the Fed, no question. You could see the 30-year, it was up 0.54. Remember, the red candle was a down day, closed down here. So there is a gap up, but it failed to hold it and pull back in. So I'm not convinced the rates are going to pop here. So we'll see. If the rates go up, that is bad news for equities. Um, but if they go up above 5%, I think it's really bad news. And I think there's a lot of questions about how the bond markets, especially on the long end of the scale, are going to react to a rate cut. Um, there are people out there who don't think we need a rate cut and that we still have inflation. And so I think the long end of the curve is going to be what's interesting as to how the market perceives the cut this coming week. If we look at the buckets, it's really fascinating because yesterday I talked about how on Wednesday we had a number of stocks above the Bollinger Bands. And then on Wednesday we had a lot of stocks below the Bollinger Bands. On Thursday we had a lot of stocks above the Bollinger Bands. And on Friday we're back to them below. This market is rotating and flip-flopping at a very high speed. No signal, but it kind of gives you a sense of the volatility. Market breadth, you could see the NYSE reversing off of all-time highs, while the NASDAQ pushed forward on the composite daily to new highs here. Didn't look at, or can't remember what the volume was, so let's just do a quick check there if I can. Let's see if I can do that. Well, I guess I can't. Should have opened up. Well, never mind. All right, let's go back to Market MRI Pro. Oh, don't do that to me. There we go. So I wonder if that'll work for this too. Let's see. Yep. Let's just go look at MarketSmith, and volume was low. I thought so. I just wanted to check. So you could see, though, we gave up on the NYSE. We set new highs on the NASDAQ. Low volume. You could see the stocks above the various moving averages turned down on both. So despite new highs, higher highs, less stocks above their moving averages, that is a negative divergence. You could see the AD line was negative today despite higher highs on the NASDAQ. And the up-down volume was negative on the NYSE, but positive on the NASDAQ and no new signals down below. On the extended market breadth charts, I'm seeing higher highs on both the Spider and the NASDAQ composite, not higher highs on the 13-week new high, new lows, not higher highs on the stocks above moving averages. We have a higher high, yet we've turned down on the AD lines. The AD lines on the NASDAQ is horrible. There's divergence here. More reasons to put in the we could have a pullback category. I'm still long. Don't get me wrong. I don't like shorting all-time highs. But we're starting to build a volume of evidence that things may not be as strong underneath as the major indices suggest. So, I will summarize my market position. My timing model says to be long. I am predominantly long. I have taken profits. I've put a couple of protective puts on my profitable positions, and I will play the market a day at a time. And I expect some substantial volatility in the markets on Wednesday afternoon as Powell is speaking. If we look at ratio charts, the thing that really stood out to me was the strength in communications. That utilities turned up, discretionary still looks good, and technology's eased a bit, as has energy. Staples have been weak, real estate's been weak, but the strength is communications, and here the ratio chart of Bitcoin to the spider has also turned up. And then just to remind folks, something I showed them maybe a couple weeks ago is we updated the program to give me long-term ratio charts. So if we look at the S&P sectors, and these charts are going back to 2020 or 2019, what are the sectors that have been positive since 2019? Technology and communications, tech and communications. This is why we talk about them as being what you typically see and want to see in a market leadership. Financials and industrials are holding up some, but boy, you look at real estate, utilities, healthcare, even um, discretionary, staples, materials have all horribly underperformed technology and communications since 2019. Now let's go look at the JAS layout. Again, I will be back with the stocks. This is a preview to watch video on Sunday when I'll pick 5 of my favorite after I look at 1,000 stocks over the weekend. I like to go the top down, and now you're not looking at the S&P 500 in sectors. You're not looking at the S&P 1500. You are looking at Jefferies 3,800 stocks put into sectors and industry groups. And if we look at top performers in the market, the only thing that was up on the broad markets was utilities. I like looking sometimes at the last couple of days. So utilities, communications, real estate, let's take tech. So these are the leading 4 sectors right now. Now I get over here the industry groups in those sectors. Now I don't want to look at 1,000 charts, at least not tonight. So let's just look at 2-day movement here, and we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. These are the top 10 industries coming from the leading 4 sectors, and I've got 279 stocks. First thing I like to do is I like to come in here and put the $5 and the 500,000 filters, and I'm down to 145. There's lots of different ways to take a look. I might go to that 2-day momentum. Let's take a look at the top 10. IBEX. So I don't know IBEX. Massive move. Notice the 2 momentum dots. So then I asked the question why. I could look at fundamentals and see they had earnings on Thursday night. 40% surprise on earnings, 7% surprise on revenue, growing at a decent double-digit clip with a PE of only 12, doesn't pay a dividend. So I'd say that it fundamentally a surprise. I may not know anything about it. I might go read what the Motley Fool has to say. Leveraging AI to provide solutions to customers. Well, magic words right now. So you could click on any of these reports, even the transcripts of earnings, to know what's going on. I'd have to do a lot more research before I'd even chase a stock that was up 36% in one day. IonQ, this is a quantum play and sort of a kind of been basing for a while, hasn't it? And then a big breakout in the markets on Friday. That looks really interesting. I might put that on my buy watch list and talk about it on Sunday. Micron, I was already in, and Micron this week had a crazy week. Why was I in it? What do you see here? 2 momentum dots. A breakout here, and that's when I bought, and the stock has run up 20 points in about 6 trading days. QMM, don't know anything about it. Looks like it might be an IPO. CLAC, a very expensive semiconductor story, breaking out, but like I said, very expensive. IT, Gardner is kind of too far in the dumps. CAMT, I'm not sure if it's electrical measurements. There's something going on with this stock. So let's look at earnings. Earnings were not out today. Pays a small dividend. Let's look at the news. Private offering of notes, who cares? Optimistic about CAMT. So I might read and find out why something unusual here. Look at the volume. Look at that massive volume, 400% relative volume. That makes me pay attention and look down here, the relative strength versus the spider crossing over the moving average, as is the OBV. A breakout above the 50 could be very interesting. ASML, another expensive semiconductor stock, breaking out. NRG, one of the nuclear reactor utility companies to support data centers, looks like it's trying to go. And notice it's a couple days after it had the two dot signal. So you wonder if this thing isn't beginning a run. So I will typically go through this. ENTG was a semiconductor stock, um, multiple 30, that looked interesting here. Also a two momentum dots in a row with good relative strength and OBV. This one looked interesting to me as well. So I could go through them all. I'm not. It's late and I do the stocks on Sunday. Another approach that I like to do is let's add a couple more things. Let's say I want it above the 200. I want the weekly bongo to be up, which means it's in a longer term uptrend. Hit OK. 89 stocks. Let's rank them by impulses to the upside. And again, we don't need to look at IBEX again. Cirrus is another semiconductor, an old name. Cirrus Logic, WLDS, wearable devices. I don't like the topping tails. I'd have to do more. SL Green, REITs of shopping centers breaking out. This one probably pays a decent dividend. It does of 4.95%. Rigetti is another of the quantum computers. What a nice steady uptrend and a breakout. Nothing wrong with that chart. There's IonQ, Electronic Arts, the gaming company. Like to see it clear this yellow line. And then you've got CAMT, which we already looked at, I believe. Breakout above the 50, make it interesting to me. There's Micron. So that's two ways. Another way to doing top down is forget the sectors. Let these off. So now I got all the industry groups. Let's just take the top industry groups. Let's look at one-day return. Let's take the top 5: electronic gaming, information, manufacturing, assets, and medical specialties. I've only got 18 stocks there when I put in all my filters. I can rank them, and IBEX, again, do some research, 30 to 40 plus in a day. Electronic Arts, VNet. You could tell I was looking at this. Why? Because I drew trend lines. If I was to continue those trend lines, we broke out. Relative strength and OBV look great. Are we too far extended yet? No, we are not. So there's lots of ways to skin the market. Those are some of the ways I like to look at it from a top down. We built the app that we prepackage the sectors and the industry groups and try and make your life easy. The impulse list, let's take out all the filters, is from the NYSE, the NASDAQ, and the Amex, filtered for $1 and 100,000 shares. Tonight there's 37.59. That dropped with some weakness in the market. Not a big surprise. And I'm going to leave you tonight with my go-to scan. And my go-to scan is price greater than 5, volume greater than 500,000, above the 200, weekly bongo up, and let's throw in my secret weapon, 2 days of positive momentum. Here are the stocks that make the list. Addex Therapeutics, don't know anything about it, but a significant breakout today in the market. Notice the two dots that came in, coming out of a squeeze with relative strength and OBV. Problem is, after this move, it's extended. It wasn't on earnings. Was there news? All right, so now that's an old news. So no idea why this popped. I would not buy it until I figured out why. AMRK, A-Mark Precious Metals. Is this a silver play? I would do some investigating, coming out of a squeeze with the two drops, breaking out above the 200. It's a beautiful pattern. I just don't know what this company does. Booksy, Black Sky, take out of the 50 will be interesting. Notice the two momentum dots. CAMT we've looked at 3 times already. IBEX we looked at already. NB, again, no idea what these guys do. Don't care. Uptrend, pullback, breakout, decent volume. You had a gap volume rather, 3 days of momentum in a row, even better. Quantum, does this not look a little bit like the stock that I started my PowerPoint with? The grab breaking out. Don't like this pattern here, but I like what it's doing here. The two dots in a row coming out of a squeeze, good relative strength OBV. This might be one for the weekend. And SONN, another cheap stock, Sonnet Biotherapeutics. Again, don't know anything about it, but there's three dots in a row. Yes, dots sound so simple. They're not simple. They include things like Bollinger Bands, movement in the Bollinger Bands, price, volume. There's a number of things that go into that. Come to my live meeting, you'll learn the secret ingredients. But hopefully you like this video. Hope you like this format. It's a little shorter. I love the scan. I find my big winners there. That's where I found grab. And if you just look at it and you go back, that's what it looked like. Two dots in a row coming out of the squeeze. Relative strength and OBV above their moving averages. High jump at 12.53, and the rest is history. Have an awesome Saturday, and I will talk to you sometime late on Sunday. Thanks for being a viewer. Please hit the up thumb if you like this, subscribe, hit the alarm, and we'll see you on Sunday.